Okay, we got September 20, 2023. September 1st. Let's go over CPI. CPI month-to-month data. Still the same. We had a school opening, I think. Yeah, everybody went back to school once school started opening around the 4th. Down here where I am, the school opened, like around the 1st. Anyway, they're still tracking unemployment at 3.8% in September. We had a strike that happened at the end of last month, September, by the UAW. You'll probably see it on the news if you didn't already see it. And then they had a meeting on the 20th. Federal Reserve had a meeting on the 20th, and they went over exactly what they were doing. They did not raise as the market expected. They kept everything the same, but obviously even if they don't raise, if it stays the same high, it still affects the economy a lot because that damage still prolongs what's going on. So if the rates are high, even if they don't raise, it's still gonna affect us. You got a rate statement, overnight rate, ISM services, PMI, and we had trade balance coming in also. I'm looking for unemployment claims, still high, 216K. Had Fed members speaking again that the 7th, they usually speak on Wednesday or Thursday, and then G20 meetings. This is when Biden goes over and has these meetings with the G20. He usually does this on a weekend. They talk about what they're trying to do with the world, who needs more money, Ukraine, etc. GDP down month over month, 0.5%. Not good. GDP's been down a lot this whole year. And this is the important one right here. Is core CPI came in at 0.3% month over month. CPI month over month is 0.6%. That's not good. Year over year, 3.7%. So it lowered because it was at, I believe it was around 4% around there. Well, it says actual was at the 3.2. So anyway, so back to that week. So this was before they had this meeting. So anytime they're gonna have a meeting, I like to see what's going on that week before, because you might start to see a lot of movement in the overall markets. The media start to say, all right, this is what they're gonna do. Just pay attention to the media that week before they have a meeting, and then you'll see what they're gonna say. You'll see what the market's predicting that they're gonna do. This is when they had that meeting. They said the federal funds rate was gonna stay 5.5%, and that was their statement. That was their press conference at 2:30. Powell went over exactly what's going on, and then they check that right after they have their meeting. They have a credit card spending year over year, because you've probably seen the media go over it. Just watch certain news channels, and you're gonna see the national debt on the credit cards you're gonna see the national debt, what it is. It's like trillions of dollars, like 1 trillion consumer credits. It's pretty high. So they're really watching that right now because they're trying to see how much there is flowing out. Because if people are, spending, then okay, people still working out there. If people are still spending, the people still working, the economy's still moving. And then they had their policy summary. They had their official bank rate votes 405, 702. Everybody voted. Official bank rate is 5.25%. Inflation letter. See, all this is red news. Anytime this comes out, this is red news for the. This is what you guys need to look for as consumers, because I know a lot of you guys can't really figure this out yet, because you haven't been looking at the economy just yet. You haven't been seeing how things move. But I'm here to show you this is how you analyze things. This affects all the markets. This affects trade balances between the Canadian dollar, USD, euro. It affects all of these things. That's why I personally use this to analyze what's going on. And then they had more red news going on. This is all September, and then he gave a good statement, important statement on what was going on inflation. FOMC member. And Powell spoke again that Thursday, a couple days ago, and then we're in October now. So that was September was a pretty busy month. Everything opens up again. You're gonna see the unemployment rate jump again. And my prediction is this election is gonna affect a lot of things coming up in January. It's expected that they're going to do some sort of crash to the economy in March. What my sources are telling me. Some sort of crash, and then the economy is going to slow down again. They're already spreading news about it, and you'll see it on the media and stuff. But just be careful with, as always, hold on to cash, hold on to your assets. That's the most important thing right now. Hold on to those assets, and the interest rates are still high right now, so it just is what it is. We'll see what happens in October. That's pretty much it. And then I'm going to be giving another analysis on October later that month. But so just let me know what you guys think. If you need some links, resources, I'll send them to you.